This is the Asia Trade. I'm Shery in Seoul.
I'm Haidi, Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set for declines as traders weigh higher than expected US jobless claims against hot producer prices ahead of next week's Fed decision. The ECB is cutting rates for a third straight meeting. China's top officials wrap up their economic work conference, saying boosting consumption and domestic demand are now the top priorities. And South Korea's opposition files a second impeachment motion against President Yoon after his defiant speech trying to justify his call of martial law.
Well, we'll start you off with breaking news out of Peru. We are getting the reference rate being held steady at that 5% level. That was the expectation by economists. Also, we are perhaps looking more for signals of an end to this easing cycle. We have seen higher headline and core inflation numbers for the month of November for Peru, and that persistent inflation expectations also warranting some caution for the central bank. Not to mention that activity has increased in Peru, so perhaps the central bank not in a hurry to ease again, but holding steady right now at that 5% level as economists had expected. And Heidi, we continue to watch the developments here in South Korea and how this will actually affect the economic outlook in 2025. We have now seen the opposition filing again a second motion to impeach President Yoon. So that vote could happen again tomorrow on Saturday. And remember, last time they were short of enough ruling party lawmaker support to make that happen. This time we're getting more indications and signals coming from more ruling party lawmakers that they might vote to impeach President Yoon. Of course, President Yoon has vowed to fight until the end.
And it's quite interesting, right, because when it comes to the broader economy in South Korea, we've heard from economists who are saying, yes, the political kind of distraction that we're seeing at the moment is one reason why investors might be risk averse. But there's also concerns about the broader economy, particularly if we get kind of the broader trade headwinds coming from a Trump tariff war against China, and that could spread to these export sensitive, vulnerabilities like South Korea. We did also hear from China's top leaders as they wrapped up that Central Economic Work Conference, and what markets were really hoping and praying for more details on the fiscal stimulus plan and their economic priorities for next year. Perhaps unsurprisingly, the focus is very firmly shifted to boosting domestic consumption. Private consumption in particular will be a key focus. We also saw signalling of more public borrowing, spending more generally in 2025, that shift in policy focus to try and boost domestic demand in an effort to really repair both, the weakest link within the economy, as we've seen that sort of correlation with weakness in the property sector, but also to kind of buffer some of that strength ahead of potential further tensions with the US and that trade situation, Shery.
And given the uncertainty, not surprising that we have seen a lot of skepticism so far when it comes to market reaction. In fact, Chinese stocks under pressure this week. Take a look at how we're setting up for the market opens across Asia, because Japan, on the other hand, has been gaining ground and is now at the highest level in about 2 months. Chicago Nikkei futures right now unchanged, while we're seeing the ASX 200 and that staggered open down 0.4%. And this, of course, as the Aussie also spiked and really was the best performer among the G10 currencies after that strong jobs report. But a lot to watch out for in the global markets, because, of course, we also have the ECB cutting rates as expected, but that Swiss National Bank actually surprised markets with a bigger than expected rate cut. So we had the Swiss franc also the worst performer among the G10. Take a look at U.S. futures right now. After stocks stalled, given all of these big central bank decisions overnight, we're, of course, still expecting the Fed and the BOJ next week. We're watching after hours trading. You can see right there the NASDAQ 100 futures pointing up, because we are seeing some upside for tech. Chip supplier Broadcom gaining on that better than expected profit. We are continuing to see solid AI demand as investors are also digesting U.S. producer prices jumping, but that surge being related to one specific product, eggs, and other categories actually remaining pretty muted. And of course, Heidi, that's what the Fed is following.
Shery, let's talk a little bit more about what we've been focused on when it comes to China, which is, of course, these economic priorities for next year and how exactly the leadership is planning to address these broader tariff and trade risks with a Trump 2.0 administration. This is really kind of to try and repair some of the sentiment that's really been damaged, particularly across households as a result of the weakness in the property sector. And again, this looming threat of geopolitical pressures is weighing very heavily. Let's bring our Chief North Asia correspondent, Stephen Engel in Hong Kong. So, it's interesting we talk about this, shift to vigorous levels of domestic consumption. Is this sort of part of a bigger picture? Because we know that shift away from investment and exports has been something that they've wanted for years now.
Yeah, look, if the Chinese officials want to boost domestic consumption vigorously, its own words, then we kind of need the details on how they plan to do that, right? And that's what I think a lot of market participants have been waiting for this week, with a Politburo meeting on Monday, followed by 2 days of closed-door sessions of the Central Economic Work Conference, which traditionally puts out a statement, as they did last night, in broad brushstrokes of the priorities going forward. And that will be basically with the details being revealed at the National People's Congress in the first week of March. But there is growing urgency and impatience, if you will, in the economy for some details. Yes, they're going to. Top priority is going to be boosting overall domestic demand and, in particular, domestic consumption. And we've already seen reports yesterday of major cities like Shanghai and Beijing offering some shopping vouchers to get people to start shopping. Look, Xi Jinping is not a advocate of welfarism, so we're not likely to get broad handouts of cash to households. There's a lot of them in China, no doubt, but they want to stimulate the demand. So what we're likely to see, and according to the readout that we got from the Central Economic Work Conference, is that they will raise the fiscal deficit target as well as strengthen the social safety net with broad promises to bolster health care and pensions. That's just one part of it, because households have been squirreling away more money to pay for rising health care costs, because that social safety net, which was a hallmark of the Mao Zedong era and the Iron Rice Bowl and like that and similar policies, have obviously been dismantled in a more freer market economy in China. I say that, of course, in loose terms. But again, households are reluctant to spend right now, so they're saving and not spending. So we're going to have to flesh out a lot more of those details on how they plan to do that to boost consumption, because it is the top priority. And so far, policymakers, though, have largely kept investors guessing on the scale and specifics of this stimulus.
Yeah, so those specifics, how much longer do we have to wait? Is it going to be until next year, especially in March with that other Congress meeting?
Well, yeah, that's probably when we'll get the details, in particular on the growth target. And that growth target is likely, the signals coming from these closed-door meetings have been that they'll likely set the target of around 5%, just like it was this year. Now, official data says over the last, in 2023, there was a growth of about 5.2%. But again, we're getting comments overnight from this noted Chinese economist, Gao Shanwen, who was, made headlines earlier this month when he talked about, and I'll quote him, he says, the economy in China is full of vibrant old people, lifeless young people, and despairing middle-aged people. Quite damning comments, and not necessarily for the scope or his assessment of the economy, but to have the nerve to make these comments is what a lot of market participants said. So he was out speaking in Washington, D.C. again, and he says the actual growth rate right now is around 3 to 4%, possibly as low as 2%, and that they're kind of, overstating the growth rate right now at a time when the Chinese leadership is trying to boost confidence. So we are marking his comments as an assessment of the real situation in the Chinese economy right now. And that's why there's added urgency to get that main pillar, one of three main pillars of the Chinese economy going at a time when the Trump administration is threatening those big tariff increases on exports. And there's really, yes, there's some stabilization on pricing in the property sector, but there's no guaranteed floor on the property sector as of yet. So boosting domestic consumption only for the second time in the last decade has been set as the top economic priority by the top leadership in China.
Our chief North Asia correspondent, Stephen Engel, there. Now, here in South Korea, the opposition has filed a second impeachment motion against President Yoon. Bloomberg's Sang-mi Cha joins us now with the latest. And Sang-mi, it's going to be another busy weekend for us. And I remember last Saturday, the roller coaster of emotions for protesters out there. What are we expecting this time? Is it finally going to pass?
Yeah, so yesterday the opposition filed a second motion to impeach President Yoon, and that was after the defiant speech he had in the morning that was surprisingly long, 20 or even going into 30 minutes compared to that 2-minute apology that he had earlier. And this time they need 200 votes again, the opposition. They're short of just one person from the People Power Party because 7 have actually indicated that they will go and sit in a vote on Saturday, which is very unlike what happened on Saturday, which the whole party boycotted that vote. So this time around, although Yoon did try to turn that sentiment, to say that he was trying to justify what he did, through that martial law order, but it seems like it's not gaining that much traction. So there is higher possibility of the vote passing this time.
Because it's pretty common rhetoric, isn't it? I mean, he's blaming the opposition for anti-state activities that he justified as that he couldn't explain or he couldn't reveal. But given the situation right now with the multiple investigations ongoing, what do we know at this point about how his government is running?
Right. So the main opposition party leader has oftentimes said, several times said, this is de facto a planned government. There's de facto no leader in the Korean government right now, which is true because in a sense that they are trying to make him, suspend him of his duties. The ruling party is also not really, following his mandate as well. And most of his cabinet and his officials are actually impeached or suspended of their duty as well. And when you see right in front of the presidential office, there are a lot of investigators who are trying to raid into his office. That's quite rare, and it's almost impossible to ever step inside that premise because oftentimes the Korean presidential office is actually protected by that military law. So there are a lot of military secrets. So it's never happened before for these investigators to step inside president's office. So there has been that standoff going on for the second day. It will be the third day today. And it was funny to see in some of the rally yesterday, there were some carols being turned into this impeachment song, and a lot of the public just has been gaining that ground right there.
The protest culture in South Korea is really interesting to see. I mean, we were out and about and we saw these protesters bringing these lights that they use for K-pop concerts. In the meantime, well, the markets don't seem too worried at the moment. We saw the Kospi stabilizing. In fact, we're at levels from before martial law was declared. The Korean won range-bound as well.
That's correct. So it was very worrisome when the martial law first hit, and we saw a lot of gyrations in the intraday moves in Kospi and Kosdaq as well. But yesterday, Kospi did close 1.6% higher, and a lot of the traders are telling us that they believe, the market wants to believe that the impeachment vote is likely to go through, and they want to believe that the worst is over and behind us. Also, now that a lot of the ruling party members are also turning their back on President Yoon, it seems like things will stabilize further. So that's what the market is thinking.
Great reporting. I'll see you out and about. We're just bracing for another weekend of that second impeachment vote. We have more ahead on the Asia Trade. This is Bloomberg.
the risks to economic growth remain tilted to the downside. The risk of greater friction in global trade could weigh on euro area growth by dampening exports and weakening the global economy. Lower confidence could prevent consumption and investment from recovering as fast as expected.
ECB President Christine Lagarde there speaking as the central bank signalled further easing next year after lowering rates for a third straight time. Traders are still pricing in a Fed rate cut next week following the ECB and SMB policy decisions. Garfield Reynolds leads our Markets Live Asia coverage and joins us now for more. So sort of the end of the year, there's some degree of certainty, but less so going into 2025.
Yeah, very much less so going into 2025. And there's a policy divergence on the expectation growing for the monetary side of things that's based on effectively the political or policy divergence that is brewing with the policies that President-elect Trump is promising to pursue. Definitely, whether or not they're actually that different from the rest of the world, aimed at driving a wedge between America and the rest of the world. So you look at what went on overnight with the Swiss National Bank cutting by 50 basis points, the ECB cutting by 25, and really opening the door to keeping on going. That's standing in contrast to what the expectation is with the Fed, which is they will cut 25 and signal a willingness to pause because the US economy is doing well enough to undercut the need for rapid rate cuts in 2025. Maybe there's a hint, behind there. I don't think they would make it explicit, but there has to be at least, some thought inside within the cogitations that are going on within the various Federal Reserve banks, that there's potential that what is coming next year is going to add to the upside risks for inflation and therefore make it less necessary or less feasible for them to cut rates as fast as elsewhere.
What does that mean for currency markets? Because it seems to me that if the Fed just holds and everybody else is moving down, then the dollar might strengthen, and that could pressure Asian currencies a lot more at a time when we also have big central bank decisions coming up like the BOJ next week.
Yeah, that's definitely part of the mix, and the yen has been somewhat surprisingly weak considering that the economic picture, or at least the inflation picture for Japan, very much looks as though it would justify a rate hike this month, but instead the signaling has been that they're willing to wait. So that's what sent the yen lower. The yen might get, that stands out to me as the currency most capable of staging a rapid and sustained turnaround in the coming weeks because of that dynamic. Because if the BOJ does indeed hold, then once it's done that hold, it's going to make it clear that the next move is probably going to be to hike rather than to hold early next year. And given those dynamics we've talked about, that's going to make it more attractive than a lot of other currencies where the pressure is seen as being pushing towards rate cuts. The Australian dollar stands out there. It lost overnight all of the gains that it had posted after that very strong employment report yesterday. That report had cast doubt on the potential for a February rate cut. And yet when you look at the currency back down where it was before the report, the currency is telling you that traders, both FX and rates, very much see that as being live. And part of that is, again, because of the pressure that is coming from the US and the likely policies under President Trump. The expectation is going to be that central bankers will act to safeguard their economies.
Garfield Reynolds, who leads our Markets Live Asia coverage. We have more ahead on the Asia trade. This is Bloomberg. Take a look at the state of play. We're just about less than half an hour into the start of the staggered open here in Australia this Friday session. A little bit of downside there, about 0.8% low. We're seeing just about every sector in the red at the moment, and the biggest losses seen across the materials and utilities names. Perhaps a little bit of disappointment when it comes to a lack of detail over the China stimulus story. This is now the fourth straight day of losses for Aussie stocks. Well, DigiCo Infrastructure REIT is set to begin trading in Sydney in the next hour after a $1.3 billion IPO that was Australia's largest offering in over 6 years. Our Asia Equities reporter Georgina McKay joins us now. So perhaps not the best day to be making a debut, but what do we know?
And Friday the 13th.
Yeah.
But yes,
it is.
Bit of excitement for the Friday. So largest IPO since 2018, 6 years. DigiCo REIT is what they're branding themselves as, and it's going to start trading at noon Sydney, so 9 a.m. Hong Kong. They've raised $2 billion Australian in the initial public offering at an offer price of $5. So we're looking to see it go from up or down from that $5 benchmark. So the IPO is basically seeking cash to invest more in data centre infrastructures, and that's been a hot theme this year. We saw the huge mega deal of AirTrunk, which is Blackstone's biggest deal in the Asia Pacific, $24 billion. So it's hot on the heels of that, and it's been pretty popular among investors. We've heard a bit of oversubscription and in high demand, so it'll be very exciting to see what happens at noon.
What are we hearing from analysts?
Yes, so analysts, Bloomberg Intelligence are a little sceptical on the price alongside a few others. So they're saying that the valuation blows AirTrunk and NextDC out of the water. And then we had Morningstar valuing the stock at $3.40 Australian a share. So it's a 32% discount to the offer price. So a little bit of scepticism. We also saw that going into Guzman and Gomez back in June. So that was another very exciting one. It did go crazy on open, so up 36%. I'm sure DigiCo are hoping to see something like that happen here, but we'll see.
Our Asia Equities reporter Georgina McKay there joining us in Sydney. And here are the latest from the corporate front. Broadcom shares jumped in late trade after it predicted 65% growth in the AI chip sales in the first quarter. It also sees a $90 billion market by 2027 for the AI components it designs for data centers. Investors have piled into Broadcom stock this year, betting that the AI craze would fuel a sales surge. Google and Samsung have partnered to create a new operating system and headset for the mixed reality market, challenging devices from Apple and Meta. The new version of Android's operating system is designed for extended reality. The Samsung-built headset is codenamed Muhan, which is Korean for infinity, that's set to debut sometime next year. Bloomberg has learned that China's Instagram-style app Xiaohongshu has told investors it's on track to double profits this year to over $1 billion. The strong results are likely to revive speculation about an IPO. Xiaohongshu has grown rapidly to 300 million monthly active users, partly at the expense of Alibaba and JD.com. We have more ahead on the Asia Trade. This is Bloomberg.
Take a look at how we're trading in US futures as we see a decidedly risk-off start to the session here in Asia. S&P futures looking like they're a little bit positive, certainly stronger gains when it comes to tech-oriented NASDAQ 100 futures there. But we are seeing that record rally showing some cracks. There's a lot of sort of a lack of breadth in these stocks that are being left out at the moment. The number of falling stocks outnumbering rising ones for a record 9 consecutive days. So some worries about the weakening foundation for the US stock market rally, particularly when it comes to the outsized influence of tech. But Goldman Sachs chief US equity strategist says he's still optimistic about the market as the Fed continues easing policy settings. David Kostin told us that Wall Street should also get a boost as Washington turns more business-friendly under a second Trump administration.
I have the benefit of working with the Goldman Sachs economics team, and their forecast right now is the Fed will cut next week as well as the beginning of next year. That's mostly priced into the market. The expectation for most portfolio managers with whom I interact on a regular basis are expecting an easing cycle to continue. And the stock market is pricing as though the underlying economic growth is closer to 5%. The economy, of course, is not growing as rapidly as that, but the performance of cyclical stocks relative to defensive stocks is more consistent with a pretty robust economic underlying activity. In fact, that is what most of the fund managers are anticipating. The animal spirits have really been out in force in the last month. We've seen the market rally by roughly 5% since the election. You saw recently the NFIB Small Business Optimism Index jump sharply. That's pretty consistent with what we saw in the first Trump administration. The expectation of more business-friendly environment, whether that's true or not, of course, that remains to be seen. CEO confidence is typically highest in a unified Republican government. So that also is, I think, one of the reasons why you've seen and we are expecting a 25% increase in M&A activity next year. The CEO confidence is one of the key variables, along with financial conditions and economic activity. So those are some of the attributes around why business expectations are pretty strong. The stock market is pricing that, and we have expectations of roughly 7% increase in the S&P 500 during the next 12 months to around 6,500. So that's sort of the lay of the land, Matt, as we see it now.
David, what do you tell people who are following the animal spirits? Should they keep following the animal spirits, or is there something more under the hood they should be looking at, given that when we look at your analysis, you're taking a look at a very, very specific set of stocks that should outperform and not just the entire index?
So we have a couple of strategies that we think about in this environment. One would be companies whose customer base or customer clients are small and mid-sized businesses. The intuition behind that is that companies that are small businesses are looking to spend more money in the idea of a more optimistic outlook. So if you're a supplier of those to those businesses, that's usually a good source of potential positive earnings revisions, more greater business.
Goldman Sachs Chief US Equity Strategist David Kostin there speaking to Bloomberg Shanali Barsak. Let's take a look at how we're trading, just about over half an hour into the start of trade here in Australia. It is a pretty down day, really kind of reflecting the broader resentiment that we're expecting this Friday session across Asia. We do have just about every sector trading in the red when it comes to Australia. The fourth day of declines, and Nikkei futures also looking pretty tepid, Shery.
And Haidi, here in South Korea, the opposition has filed a second impeachment motion against President Yoon. The likelihood of its passage is increasing as more ruling party members indicate they will support it. Joining us now from Seoul is Su-Kyong Hwang, senior lecturer in Korean studies at the University of Sydney. Su-Kyong, great to have you with us. I guess the most important question right now is, do you expect President Yoon to be impeached this weekend?
I think he will be impeached largely because of his own speech yesterday. After his bizarre speech, many people who supported him turned away from him, are there in the process of turning away from him, beginning with the leader of PPP, the People Power Party. So I think we'll have more votes this time, and it may fill up the 200 seats necessary for impeachment to succeed.
What happens after the impeachment bill is passed? We understand that it goes to the Constitutional Court, but then they have 180 days to make a decision. And yet there were some concerns about perhaps a number of sitting justices at the moment that might not be enough to actually have a ruling.
I think that could also be an issue. The other concern, I think, is that I think people mostly have is the economic effect of that period of impeachment, that Yoon's government has already been falling apart, and it created a leadership vacuum. Apart from this political uncertainty in the next few months, the greatest fear is the impact on the economy, and there are some discussions on both left, middle, and right about having some kind of bipartisan or multi-partisan economic council or emergency economic council to stabilize the economy in the meantime until the next election happens within a few months, and while sorting out the mess that we have here.
So who's running the government right now?
I would say Han Duck-soo, Prime Minister, and some people say metaphorically it's in a state of anarchy or leaderless position. Yoon Suk-yeol is still, president in the case of emergency. He can still do something about emergency situations, which already is. So yes. That's the status quo right now.
So if we actually do get to elections, who do you expect to win?
I can't predict, but the recent poll said that the opposition party leader Lee Jae-myung is likely a favorite, but I can't predict this kind of things. There are so many factors going around.
Yeah, I spoke to Lee Jae-myung, and he seemed very optimistic and encouraged by South Korea's economic prospects, because he said that at least when it comes to corporate reforms and market reforms, both the ruling party and the opposition party want the same things. Do you expect some continuity in that sense?
Yes, to a degree, but Lee Jae-myung has often proven himself to be quite effective in managing economy when he was representing for Gyeonggi province and other experiences. So he may be able to deliver what he promised, but we may not know who else also may appear as a possible strong candidate.
Somewhere where opposition and ruling parties really differ, though, is on North Korea policies, is in foreign relations, right? What are some of the big changes that we could see if the opposition does, in fact, head the government in the next elections?
I think the change would be quite significant. In the Yoon Suk-yeol period, what happened was that he really cut off all kinds of communication with North Korea and brought back a very old-style, Cold War rhetoric against North Korea. When Lee Jae-myung or whoever else comes in, it's likely that they will resume some kind of dialogue and try to bring North Korea into kind of international discussion and see if there is a way that they can improve the current situation. I think in the last few months when North Korea was participating, where they decided to participate in support of Russia, South Korea was in a panic, and so was United States. That process may also change, or I don't know, Lee Jae-myung will try to convince the leader of North Korea to maybe withdraw and do other things. More likely, I cannot predict this, but there is likelihood of more dialogue
with Pyongyang and other countries. Su-Kyong, before we let you go, I have to ask this. What happens if tomorrow the impeachment vote fails again, if the ruling party boycotts it again? What's next?
I think they're going to keep trying. They said that they're going to keep trying every week. So we'll see another appeal happening next week, next Saturday, and another attempt at a vote. But yesterday's response, the reaction of the oppositional not the oppositional party, but the Conservative Party, after Yoon's speech, seemed very dramatic. There was a dramatic turn away from him, that people were not only shocked that he did not regret, that he did not reflect on what happened. And that kind of voices came from his own party members, at least a few people, going up to maybe 8 or 9, seemed quite clear that they're not going to support him.
Su-Kyong, Hwang, good to have you with us, senior lecturer in Korean Studies at the University of Sydney. Foreign leaders continue to watch the developments here in South Korea. We spoke exclusively to Akihisa Nagashima, National Security Advisor to Japanese Prime Minister Shigeru Ishiba. He says Tokyo's policy hasn't changed as of yet amid the political turmoil in Seoul.
What we're most concerned about is how the situation between Japan and South Korea, or between the U.S. and South Korea, will develop depending on the direction of the South Korean administration. There may be many things going on in South Korea domestically, but since the strategic situation surrounding South Korea hasn't changed, I don't think there is room for major policy changes there, regardless of the administration. I expect continuity.
He also told us Tokyo needs to prepare for tariffs that President-elect Donald Trump has pledged against its biggest trading partners to reduce collateral damage on Japanese companies.
We were able to discuss the issue of tariffs in a frank manner on how they add inflationary pressures on both the Japanese economy and in particular the U.S. economy. I came to the realization that Japan must be prepared for Trump following through on his plans.
Some of the other stories that we're following this hour. CBS News is reporting that Chinese President Xi Jinping is likely to decline Donald Trump's invitation to next month's inauguration in Washington. Records show no foreign leader has ever attended such a U.S. transfer of power. Separately, Xi has written to the U.S.-China Business Council in Washington saying he's willing to maintain cooperation and manage differences with the U.S. through dialogue. French President Emmanuel Macron is set to name a new Prime Minister on Friday after the government of Michel Barnier was ousted last week. National Rally leader Marine Le Pen's decision to join forces with the left to bring down Barnier's government has boosted her ratings. Meanwhile, Macron's popularity is near record low. Russia is close to an agreement with Syria's new leadership to maintain two vital military bases in the Middle East state. Sources tell us the Russian Defense Ministry believes it has an informal understanding with the Islamist group known as HTS. Western officials are said to believe that the Russian bases could act as a deterrent to extremism in Syria. More ahead on the Asia trade. This is Bloomberg. The human egg trade has morphed into a global business worth billions of dollars, but it may be coming at a human cost that cannot be measured. For today's Big Take, Bloomberg reporters track the egg trade around the world, including from India to Argentina, Greece and Taiwan. Bloomberg senior investigations reporter Natalie Obiko-Pearson joins us now with more. So Natalie, tell us about this trade, which really isn't sort of spoken about very much, and what did you learn?
So our investigation was essentially about how the human egg has turned into a global commodity. Eggs are sourced from young, fertile women around the world. They are shipped across international borders, banked, traded, and sold on to IVF patients that can't use their own eggs. This trade operates in a very murky, opaque market. It's virtually unregulated and unmonitored by most governments around the globe. So some of the questions that drove our reporting were, how are eggs getting sourced? Who's making money from this? And if you are an IVF patient, how do you know that the egg you have been given was sourced ethically? That we spent a year investigating the global market for human ova in 11 countries. And some of the major findings were, for example, in India, we came across a case where a young minor girl had been lured into selling her eggs by an IVF chain that is backed by some of America's biggest financiers. In Greece, we came upon a mother who was told by police that her eggs had been stolen. The clinic had apparently been doing this to dozens of women. So these are, like any precious resource, there is always an opportunity and there's also exploitation.
Natalie, this is really an incredible story, and what great narratives you've gotten from all of these people. I mean, this is such an important issue because this in itself puts so much burden on the women's body, right? Extracting eggs is not an easy process. Tell us about these vulnerable people who are also doing it, as you explained, for money sometimes and are at risk of being exploited.
Mm-hmm. No, you're absolutely right. I mean, fundamentally, I think this story is about the commodification of women's bodies and the commercialization of the reproductive fertility industry. This egg trade is being driven by a global fertility sector that has reached about $35 billion and is absolutely booming. Kind of in anywhere you drop a pin on the map, like IVF is booming. And it's an incredibly extractive process, as you say. It's not anything like, say, sperm donation. In order to retrieve eggs from a woman, she needs to undergo 10 days of hormonal injections that can be very, very tough to go through. You go under general anesthesia. A big needle is pushed up your vagina, and the eggs are aspirated out. It's the kind of procedure that no one is going to undergo, almost no one is going to undergo altruistically. And so therefore, in order to convince women to do it, they get paid. And that's where some of the ethical issues come in. Are you compensating the woman fairly? Does she know what she's getting into? And the sad thing is that there is very, very little long-term research on what the implications of donating multiple times might be for a woman.
Yeah, I gotta say, I've had this process myself, and it's really, really burdensome on the body, and this is an incredibly important story. Natalie, thank you so much for bringing it to us. Bloomberg senior investigations reporter Natalie Obiko-Pearson. Do check out the story, The Egg, on The Big Take. We have more ahead. This is Bloomberg.
Take a look at what we're getting crossing the Bloomberg when it comes to Japan's Tankan survey. I beg your pardon. All industries are seeing the dollar-yen specifically at 146.88 in the full year for 2024. Large companies, Tankan, the full-year capex for this year rising 11.3%. Non-manufacturing seen at 28. That is in line with expectations. The small manufacturers are not seeing a change there. Small non-manufacturers, Tankan at 16. That was much higher than expectations of 12. That large manufacturer, Tankan, seen at 13. Just slightly higher than estimates, and for non-manufacturers it is more or less in line with expectations. Let's get to Tokyo. Our equities reporter Haidi Kasano joins us now. So Haidi, do these numbers kind of move the needle when it comes to sentiment at all, particularly as we're just in such a precarious time of signalling and communication potentially ahead of the BOJ?
Good morning. Yes, I'm basically, the markets have been thinking that the likelihood of the BOJ's rate hike in December has been receding, and even though the Tankan survey just published this morning showed us slightly better than expected numbers, I don't think that's going to hugely change the investors' perception here. So at the moment, basically, the market is betting that there's about 60% chance of a rate hike in January, and about 20% in December, and another 20% after January. And I don't think that's going to change that much today.
Haidi, despite the fact that the BOJ is headed towards rate hikes, there was a lot of optimism and support for the Japanese equity markets because of valuations, because of these different government programs to support the markets. What are we seeing now?
Well, there are a lot of a combination of a lot of things. So first of all, if you look at how global markets have performed after the U.S. elections, I mean, this is basically exactly what people have been saying. The U.S. will probably the best place, and the U.S. market has outperformed the rest of the world. But Japan has been doing very well compared with many other markets. And that's exactly what happened. So the Topix index hit a 4-month high yesterday, although, I mean, the gains have been not that big, and it's not that exciting either, but at least the market has been supported very well. And governance is a very important issue at the moment, and in fact, that has been one of the main drivers of the Japanese market over the last 2 years. Now, the interesting thing is investors' preference has changed over the past few months. So in the past, they were basically buying the cheapest stocks. The idea was that their valuation is so low that it should be very easy for the management of the company to do something. But that phase is now over. That's the perception many investors have. So now they're trying to find out exactly which companies have more potential to boost profitability in the future.
Equities reporter Hideyuki Sano there joining us from Tokyo. And here in South Korea, too, we continue to watch the valuations here in the markets. And Heidi, even despite the political turmoil that we're seeing right now, financial authorities insisting and promising investors that these value-up programs that the government has been implementing will continue. We're headed towards another impeachment vote, Heidi, this Saturday.
And even as we're headed towards that impeachment vote, we're hearing these reports that President Yoon tried to appoint a new defence minister, that there is still sort of government work being undertaken. So a lot of uncertainty as to what those plans are. And, as you asked our previous guest, what happens if that vote doesn't go through again? How long will kind of markets and onlookers be stuck in this cycle of uncertainty in South Korea? The market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And as we continue to look ahead to major central banks, including the Fed, but also the Bank of Japan next week, really processing that we saw continued easing from the ECB expected into next year. And the reiteration of the consumption theme, the need to boost domestic demand from Chinese policymakers from that Central Economic Work Conference, but still slim on the details and also slim on the details of a growth target as well for 2025. In the meantime, take a look at the reaction that we're seeing across dollar yen. We had pretty much an all-round beat when it comes to that Tankan data, and in particular that 14 on the large manufacturers gauge, looking like the highest in about 2 years. So above estimate reading for large manufacturers, looking like a better outlook there. Nothing, though, from that Tankan report would potentially suggest that BOJ members would be inclined towards a rate hike next week. So we'll be watching to see how that potentially plays out for the yen over the course of this trading session. The Nikkei 225, as we come online from the previous session, coming off some of those lows, right, and we're also seeing some of those uncertainties play out when it comes to not just where the yen goes from here, but also some of that longer-term concern over what Trump policies might mean for global trade and for the currency as well. Dollar yen at that about 152.59 level, and watching bonds as well, as we did see overnight just that sort of tension between the US weekly jobless claims rising more than expected, wholesale inflation accelerating in November. So all in all, when it comes to the US economic outlook and whether or not it's going to kind of move the expectations of the Fed, there's quite a bit of muddiness on the broader health of the economy. Take a look at Korea, where really political uncertainty continues to dominate that side of things. We are, of course, awaiting for further developments on that impeachment motion, the opposition filing a second motion now to impeach President Yoon. This is seen as having a higher likelihood, I should say, of passing, as more ruling party members have indicated they will vote to support it. Remember, we need at least 8 votes from the ruling majority to pass. So that could lead to a whole lot of other developments, including a constitutional court case, as well as a presidential election that could be called within 2 months once the president is moved out of office. So really watching this weekend's developments when it comes to Korea. Switching out the boards to take a look at Australia, it is broadly a down day, really broadly, because we are seeing every sector essentially trading in the red, with the strongest losses coming through from the miners in particular. Some of the financial stocks also seeing some steep losses, but really it is pretty broad-based there. We are looking at a big debut, though, the beginning of trading when it comes to the data centre operator DigiCo Infrastructure REIT, after a $2 billion Aussie dollar IPO offering that was the biggest in Australia in more than 6 years. So that is a highlight in an otherwise down day. Well, China's top leaders have set their domestic consumption priorities as the top economic focus for next year, trying to bolster consumer confidence against the threat of looming US tariff increases. For more, let's bring our Chief North Asia correspondent Stephen Engel in Hong Kong. So was there anything new from what we heard from the Central Economic Work Conference that wrapped up on Thursday?
Oh, Heidi, we want so much. We want details, don't we? A lot of talk, and
we want them
we're
now.
Still waiting for the action. Yeah, we want it now. That's right. Obviously, the markets have wanted it since that first batch of stimulus back in September. There was a lot of enthusiasm that has since petered out through the third plenum, through the Politburo meeting on Monday, and then now the Central Economic Work Conference, which wrapped up yesterday in Beijing with a communique essentially doing what they do every December as they outline the priorities for the National People's Congress, which begins the first week of March, and the priorities, economic priorities for next year. And that is with few details. They usually talk in broad brushstrokes, and to think that we were going to get any details maybe is a fool's errand, because they don't do the details until March, generally speaking. But what they did talk about is what their priorities are going to be, and that is boosting overall domestic demand in 2025. Only the second time in the last decade or so that they've outlined consumption as the biggest top priority economically, and no doubt it is, because you have the three main pillars of the Chinese economy. Property sector, that's still in the doldrums. You have exports potentially under threat because of the Trump administration and promises of 60% across the board tariffs on Chinese exports to the United States. And then there's domestic demand, right? The confidence is quite low right now. So what did they say? They're going to lift consumption vigorously. Now, I wish they released details vigorously as well, but they haven't. So we have to see where the policies and where the fiscal spending is going to be, because they vowed to raise the fiscal deficit target as well as strengthen the social safety net. Because, look, a lot of households in China are squirreling away their money because of rising healthcare costs, aging society, and they're not so confident that they're going to have the money, of course, in a slowing economy to pay for those healthcare needs. So they're vowing, the Central Economic Work Conference is vowing to boost support for pensions and healthcare and the like. But again, we're still awaiting the details. And that's where we stand right now. There's no cash handouts. Certain cities like Beijing and Shanghai have started their own local voucher system. We reported that yesterday, where people can go out and kind of incentivize people to spend. But big ticket items are waiting right now.
Steve, at this point, I think maybe we should just ask Santa, right? It's really all I want for Christmas is to stop talking about these broad consumption themes. What about the growth target? Are we waiting until March next year for that too?
You got to wait till March. Stay tuned. The first week of March, National People's Congress will get that growth target, and I'm betting it's going to be around 5%, which was the same target that we got this year. But we're hearing, people are speaking up. You remember, was it earlier this month, a certain Chinese economist, chief economist from SDIC Securities, Gao Shanwan, he made waves when he basically said that the Chinese economy is full of vibrant old people, lifeless young people, and despairing middle-aged people. That's all already been scrubbed from the Chinese internet, those comments. Well, he was speaking again at the Peterson Institute in Washington, D.C., and he essentially said the growth rate in China right now is probably around 3 to 4%, not the 5.2% we got last year, and that authorities perhaps, or the data at least, is probably overstating the real strength of the Chinese economy. It could actually be, he said, about 2%. So he's making waves on the internet again. So those are his words. That's his assessment. We'll have to see, obviously. They're likely to meet, at least in overstated terms, that growth target of around 5% by the end of this year.
Our Chief North Asia correspondent Stephen Angle there. I shouldn't smile at that quote. It is just so bleak. But let's get some more analysis now when it comes to the broader outlook, how investors should kind of be calibrating their positioning given what we know and what we don't know. Let's bring in from Hong Kong, Hwang, who's a partner and chief economist at Grow Investment Group. You know, always really great to have you, particularly at a time like this. I'm just sort of still thinking about the quote that Steve just mentioned, right? You know, may we all eventually be vibrant old people. But you know, it really does speak to the demographic challenges for policymakers in China.
That's right. But, you know, remember that, you know, some of the spending by the older generation is on behalf of the younger ones, you know, because the younger ones is experiencing this saving. And, you know, the jobless rate amongst the young people is very, very high in China right now. So I think, you know, some of the youngsters, you know, have been spending the pocket money from the older generation who are enjoying retirement benefits. And right now, you know, because the Social Security is still properly funded, you know, so the pension payment to the older generation is actually can ensure a rather comfortable life. And I think that's the reason why Professor Gao is making such an observation, a very interesting observation as well. I think just now Steve mentioned about the consumption coupon, and many of the tier 1 cities, especially in Shanghai and Beijing, handed out, you know, probably hundreds of billions of worth of consumption coupons. But, you know, these are the coupons that you have to spend to get the discount, right? So the coupon usage rate is about 50 to 60%. It's not very high, and it's very different from handing out, you know, cash to the population. So, yeah, you know, as the rest of the market, we're still waiting for more specific details from the government.
Yeah, as Steve also points out, Xi Jinping is not a fan of welfareism, right? But you say the conventional, you know, policies are not working. Should they be looking at things like just direct payments?
Yeah, I think at this stage, you know, most of us recognize that, you know, the conventional policy doesn't work because the housing bubble bursting is still ongoing, right? So even though we have a reasonably a rebound in October, but we've seen similar rebound after the reopening in early 2023, right? So back then, you know, we actually had 4 months of consecutively increase of housing transaction volume and price increase. And then you know, it's all the way down from there. So I think, you know, right now, no one can conclude that the property market is coming back to life. I think right now, if the property market is not recovering, then the credit growth through the property sector as it used to be cannot be regenerated either. Right? So even if you cut triple R, probably, you know, before the year end, we will see another 50 bips triple R cut, and probably next year we're probably going to see 100 basis point interest rate cut. But I think, you know, this policy has proven to be sort of futile to lift the Chinese economy, and therefore, you know, more unconventional policies needs to be done.
Is that still potentially just a short-term fix, right? Because perhaps longer-term reflation measures might just be difficult if this is a longer-term structural slowdown with a new normal of slower growth in China. To that end, do you still invest around that? Is that still a compelling investment thesis?
Yeah, I think this year, if you look at the asset price performance, right? So the best performing asset class is actually Chinese bonds, right? So it's actually one of the best performing asset class in the world, right? So it's showing you that, you know, the disinflation or deflationary pressure is on, right? So the GDP deflator has been in negative territory for more than a year, and I think PPI upstream deflation has been around for more than 2 years, right? So it's showing you the scale, the magnitude of the deflationary pressure on the Chinese economy, right? So at this juncture, you know, because if you want to stimulate Chinese consumption, this year Chinese consumption is probably about 50% of GDP. It's actually less than the historical average. So if you want to stimulate consumption to reach 5% growth target, it's going to be particularly hard unless you come up with something very creative. And on the external environment, you know, you have the trade war ongoing, right? So that is going to exert pressure on Chinese exports growth, which has been a major contributor to Chinese growth in the past couple of years during the housing downturn. So now if the foreign demand for Chinese goods is slowing down as well, then it's going to hurt your export growth and as such GDP growth as well. So I think right now, even though we're seeing some promising signs from the conference, and consumption is indeed, the one of the first priority that the government is trying to address, but more creative policies needs to be seen for the market to have the confidence back.
Sector-wise, what do you like? I know that small cap tech is one element. Why?
I think those are the guys who is more likely than not going to get the government subsidy. And also those are the guys that is less affected by the trade war and also by a weakening Chinese currency. I think the market is looking at a substantially weaker Chinese currency going into the next couple of months. And I think, for the smaller tech firms, for example, the A500 index actually has been performing quite well and has been rather resilient in the recent market volatility. So I think, these are the firms that is, holding promise for the future. Some of them have rather promising technology patents. They're going to get, subsidies from and policy support from the government, and also, the devaluation on these smaller cap names is not too excessive, and it's justified by the growth prospects, and it's attracting a lot of funds going into these sectors. So I would say that if the economy is performing 4%-ish growth, then these sectors are probably one of the better exposure that investors could have in the Chinese market.
When it comes to the degree of skepticism in this rally, and in fact since October, right, do you expect that to continue until we get perhaps more details in March?
I think in March we're bound to get more specific details. For example, one shouldn't be surprised to see fiscal deficit level raised to 4% and above. Between 4 to 5%. I think there will be specific guidance on a special purpose treasury bonds issuance and also ultra long dated treasury bonds issuance as well. So all in all, the budget deficit on a broadened sense would be about 10% plus. Right, so it's not a small scale stimulus by any measure. But then, having said that, this year we did slightly less than 10% budget deficit. Right, so one shouldn't be too surprised to see that going into next year we should increase the budget deficit level, given what has been said in the Economic Work Conference. So I think come March, normally the Chinese market would be waiting for more details from the twin sessions.
The thing with Chinese equity markets is you never know quite how the retail component is going to react, right? If you had to make a bet, do you think the next 20% for Chinese stocks will be up or down?
Next 20%. That would be like a bear market or bull market. I think the Chinese market has been locked in a trading range for decades now, right? So for more than a decade, it's around 3,000, right? So it's just appalling, the performance. And I think reason being the economic growth model is running into obstacles, in a sense that the growth efficiency, the capital usage efficiency is declining, and also the labor productivity growth has been slowing down as well. So I think as a result, the market indices has been stuck in the range for more than a decade. But having said that, though, just now we discussed some of the opportunities within the Chinese market that could give reasonable performance for investors in the Chinese market. I think if I have to say whether it's a bull or bear market, and I think it's going to be still range bound until we find a solution towards future growth.
I had to ask you that question, of course, being the one who has in the past called the rise and the fall of the China equity story before. Hwang, always great to chat with you, partner and chief economist at Grow Investment Group. More ahead on the Asia Trade. This is Bloomberg. Take a look at how Korean risk assets are trading. We're just about 20 minutes into the start of the session in Seoul, as of course political uncertainty continues to weigh. We are seeing a bit of downside there for the Kospi. It is broadly kind of a risk-off session across most of Asia today, given some of the kind of tensions over the US data that we had overnight and going into so much on the risk horizon with the Fed meeting, the BOJ into next week as well. So really tracking some of the losses that we've seen in the US session overnight. The Kosdaq, though, seeing some gains of about 0.5%, and the won is holding pretty steady at the moment. South Korea's opposition has filed a second impeachment motion against President Yoon Suk-yeol. Bloomberg Sang-mi-cha joins us now for more. So there is the expectation that this second motion, the vote on the weekend, will have a higher level of likelihood for success.
That's correct. The motion was filed after the defiant speech that we saw earlier in the day yesterday from President Yoon. It was a pretty long speech compared to the 2-minute apology that he issued earlier. But it is true that his bid to turn public sentiment against the opposition is failing to gain traction, with the members of his own party turning on him. And we know this by now, that the opposition needs to secure 200 votes in a 300-seat parliament to pass the motion. And an attempt to impeach Yoon last Saturday failed to reach that threshold after his party boycotted the vote. So this time around on Saturday, we'll be watching whether they will boycott that vote again, or actually go through and go and sit in the vote and then actually vote to impeach the president. The opposition requires just one more People Power Party, ruling party lawmaker, and to actually validate the impeachment vote. And that's because they need at least 8 people from the ruling party, 8 defection, to make this happen. But this is very likely, as we saw yesterday. The ruling party leader, Han Dong-un, earlier said that he described impeachment as the only way to make President Yoon step down. And the other possibility of other than the possibility of impeachment, we're also seeing President face a number of investigations, and he's already banned from traveling overseas.
What do we know about what happens? I mean, we know that if it doesn't pass, they have said they will just keep trying, right? So setting up for potentially, further motions and votes. But if it does go through, do we know procedurally what happens when it comes to kind of the road to an election?
Right. So if the impeachment goes through this Saturday, unlike what we have seen last Saturday, then we will immediately have the Prime Minister Han Duck-soo take over the duties. But that's already been tried out from the ruling party leader, although the opposition actually heavily rejected that offer, given that they were saying that it was the people voted for President Yoon, not the ruling party, to run the country. So we will see who will be in charge of this, and especially given that the opposition tried to impeach the prime minister as well, and also a lot of the members of the cabinet. And of course, after that, we have 60 days to elect a new president. And when it goes to Constitutional Court, it requires up to 180 days to have the whole thing go through. So we might be expecting a few months until we have the new president. And today we'll be specifically watching how the parliament goes ahead with the Security Committee. The opposition will keep asking and grilling the lawmakers involved, the cabinet members involved in the martial law order last week.
Bloomberg Sang-mi-cha there with the latest. And we spoke exclusively to Akihisa Nagashima, who's a national security advisor to the Japanese Prime Minister Shigeru Ishiba. He says that Tokyo's policy hasn't changed as of yet amid the political turmoil in Seoul.
What we're most concerned about is how the situation between Japan and South Korea, or between the US and South Korea, will develop depending on the direction of the South Korean administration. There may be many things going on in South Korea domestically, but since the strategic situation surrounding South Korea hasn't changed, I don't think there is room for major policy changes there, regardless of the administration. I expect continuity.
He also told us that Tokyo needs to prepare for tariffs that President-elect Donald Trump has pledged against its biggest trading partners to reduce the collateral damage to Japan's companies.
関税の問題についても
We were able to discuss the issue of tariffs in a frank manner on how they add inflationary pressures on both the Japanese economy and in particular the US economy. I came to the realization that Japan must be prepared for Trump following through on his plans.
More ahead on the Asia trade. This is Bloomberg.
The risks to economic growth remain tilted to the downside. The risk of greater friction in global trade could weigh on euro area growth by dampening exports and weakening the global economy. Lower confidence could prevent consumption and investment from recovering as fast as expected.
ECB President Christine Lagarde there speaking as the central bank signalled further easing next year after lowering rates for a third straight time. And that outlook is really pretty certain when it comes to expectations from the ECB. Let's take a look at how futures in Europe are opening up this Friday morning. And we're seeing Stocks 50 futures, DAX futures in Germany, all seeing a little bit of downside there. We did see a pretty steady session for European stocks. That ECB rate reduction was very much expected there. We saw some of the declines when it comes to miners and retailers and some gains across autos, and it looks like we could see a similar sort of sideways to negative session going into Friday. More ahead on the Asia trade. This is Bloomberg. Take a look at trading across currencies, particularly when it comes to offshore yuan at the moment. Dollar yuan looking pretty unchanged at the minute. We've been watching the euro, particularly when it comes to, as expected, another rate reduction from the ECB. And dollar yen just holding at that 152, just shy of that 153 level as we head into next week's BOJ meeting. A big upside kind of move when it comes to sentiment in that Tankan survey. Really an all-round beat, but perhaps not enough to really kind of shift expectations on the BOJ and therefore the move in the yen. Well, China's top leaders have set their domestic consumption priorities for next year. This is clearly the top economic focus in preparation for the threat of looming US tariff increases. Our next guest says China is ready for a second Trump administration. Let's get more perspective with the independent economist Andy Sear, who joins us from Shanghai. Andy, always great to have you with us. And, you know, there's been a lot of concern about the readiness of Beijing for Trump 2.0 because it is coming from a weakened domestic economic positioning. Why do you think that there is a level of being prepared here?
Well, I think that the China's exposure to the U.S. Market has declined substantially from 24% in 2018 when the trade war began to now about 13%. So I think that the new tariffs will have less impact on the Chinese economy. Of course, the property market has deflated, so that has made the Chinese economy a bit more vulnerable. But the property market adjustment is, I think, it's mostly through. And so the downside, there's a bit more downside, but I think that the most dangerous moment is over.
That's very interesting. But in terms of the focus on domestic consumption, domestic demand, you know, I don't want to be cynical, but we have heard this emphasis before, right? For years, probably over a decade now, we've seen the government wanting to shift away from investment, shift away from exports and manufacturing, and boost domestic demand. So what is sort of different, and what can work this time that it hasn't over the past 10 years?
Well, I think there's no fundamental change in policy. When Chinese government talks about consumption, they usually means that if the stock market goes up, people will spend a bit more money. I think that has never been a sustainable solution. So I don't believe that much will change. Chinese households are very much into savings, and savings deposits is rising twice as fast as the economy. I don't see that changing anytime soon. So the economy is still very much dependent on export and investment. In that regard, and the focus on technology and competitiveness are helping basically domestic import substitution at home and market expansion abroad. These two things are really keeping the economy going.
Fiscal spending, and more of it, has obviously already been flagged as part of that consumption push. We've seen reporting and views even published in Xinhua that could take the debt to GDP ratio to between 4 and 4.5%, where it's steadily been around 3% for a very long time. Do you worry about the sort of fiscal stability and the fiscal coffers of China, given that we know that they may have, a prolonged at least 4 years to potentially try and counteract the Trump tariff impact?
Well, I think the first is that the fiscal policy intent is to stabilize the local government finance. You look at the package so far, 6 trillion RMB giving to local governments to pay off their bills, so that their contractors get paid. That does help the economy, but it's really about the supply side, not the demand side. Yeah, and so I do not believe that the fiscal policy is about consumption. In terms of the sustainability, that's where we have better news. Chinese national debt is relatively low by global standards. It's about 100%, I think, mostly local government debt. And that was accumulated for investment, not for consumption. So it's helping the economy to, and so that is why I think that if the economy increases the debt by another 10 percentage points or 20 percentage points, it's quite sustainable. So that's where China is more resilient. Whenever the global situation becomes too complicated, they always can run up the national debt a bit to help stabilize the economy.
We're seeing, Andy, that move in the 10-year yield, China 10-year, I should say, falling to 4 basis points. Clearly, the Economic Work Conference kind of lines are stoking some bets on easing. I wanted to show you this chart because I was looking at this morning, and on the one hand, I was like, oh wow, the Liketiang index is really sitting at those near pandemic lows. On the other hand, I sort of wanted to ask the question as to whether this is still the best gauge, the best proxy to look at economic growth in China, right? Because as you talk about, a lot of the competitiveness-led sectors are really very strong, including technology.
Yeah, I think that the government target 5% is probably possible. We see exports rising close to 7%. We still see very strong growth in heavy industries like shipbuilding. Also, renewable energy actually is still booming. So we have some leading sectors, but these are really about market share expansions. And I think that next year it'll be a bit more difficult as the global trade environment becomes even more protectionist. So I think that the Chinese growth target needs to moderate next year, and so the country doesn't have to struggle like that to reach the target. The main thing is that in the long run, China needs to appreciate the currency to reflect the rising competitiveness, and that will help consumption and also help to stabilize the global economy.
I wanted to also quickly ask you about the currency as well. What are the prospects of allowing yuan weakness, and is that actually going to be something that might benefit both Beijing and Washington?
I really don't believe that the RMB should go down. China is running $1 trillion in trade surplus. The U.S. is running the same amount in deficit. So it's a kind of illogical to say China should depreciate its currency. And also, China's competitiveness is rising, and that's one reason why protectionist policies are spreading. So I think that RMB depreciation is unnecessary, and it's unjustified, and it's destabilizing for the global economy. In the long run, Chinese currency needs to revalue And that's good for everybody. And I think that the Chinese leadership may not want to revalue the currency because they like the stability from the low exchange rate. But in the long run, it's not sustainable. It's not good for anybody. The consumption economy will only come when the currency value reflects the country's competitiveness.
Andy, always great to chat with you. Andy Seow, who's an independent economist with those views on China's policy settings at the moment and the outlook. And we are counting down to the market opens in the mainland and Hong Kong after those not particularly detailed plans for monetary and fiscal easing out of the Central Economic Work Conference came out. Our Asia equities reporter Winnie Su joins us now. So we are seeing a bit of a move when it comes to the 10-year yield in China. But are we expecting much of a reaction? It was very low on specifics.
Right, exactly. It seems like investors we've been talking to this morning have been quite disappointed because of the lack of clarity and lack of details, especially after such high expectations at the Politburo meeting when they had that wording of the moderately loose monetary policy, and also the consumption stocks were up yesterday because of these news around cities like Beijing or Shanghai giving out vouchers. So people were expecting more to come around how the government is actually going to boost consumption. And that seems to be lacking. And hence, we see very little reasons for investors to kind of put that new money onto the table to bet on Chinese stocks right now. And looking at the futures, Chinese stocks yesterday, overnight, we were seeing the futures down about 1%. And the proxies around Aussie or even copper, they also see very muted reactions. So it seems like overall the sentiment around the results from that conference is still quite disappointing.
What does this kind of mean for the rest of Asia, right? Do we still see that strong correlation, particularly within the EM space, or are we seeing some more sort of idiosyncratic outlooks for other Asian markets now?
Right, so China's stimulus right now is one of that big factor that could affect the outlook of Asia's EM space, especially because of the still very close trade and economic relationship between China and these economies. So while we are seeing more pressure for the rest of Asia, especially when we're expecting the tariffs to come under Trump's presidency, that can potentially be offset if we see more stimulus to come from China. If we see some demand coming back in China, especially around travel, that can potentially benefit the Thai market. And also if the commodity prices continue to go up in China under the stimulus, if it takes effect, then that could also benefit markets like Indonesia. So that is really the elephant in the room around China's stimulus, how it could be the bright side for Asia EM that is otherwise under pressure from the tariff, from the delayed Federal Reserve rate cut, and more pressure on the Asia central banks cutting rates as well.
Our Asia equities reporter Winnie Su there. More ahead on the Asia trade. This is Bloomberg. The human egg trade has morphed into a global business worth billions of dollars, but it may be coming at a human cost that is yet to be measured. For today's Big Take, Bloomberg reporters track the egg trade around the world, including in India, to Argentina, Greece and Taiwan. Our breaking news editor Cindy Hwang joins us now for more, and this is just an extraordinary investigative piece that takes a look at what is, I guess, a real commoditization of human eggs.
Yes, good morning. Yeah, this is a story about global egg trade. And just to be clear, we're talking about humans' eggs here. So this is a story about humans' global supply chain. We investigated to find how egg donors are recruited into a 35 billion and growing global market of assisted reproduction. This industry comprises would-be parents, donors, their agents, doctors, and fertility clinics. Many of these fertility clinics are backed by Wall Street investment banks and American private equity because they see this as a lucrative business. And the demand for humans' eggs would only go up because more and more women are having the babies when they are older. And as we know, as women age, the number and quality of the eggs would decline, so that would make humans' eggs more precious. For the story, we follow several egg donors around the world, including a teenage girl in India. When her eggs were harvested at a fertility clinic in India, her government ID showed she was only 13. And we also talked to a model in Argentina and 2 egg girls from Taiwan. So the donors from these 2 places often repeatedly evaded U.S. immigration controls to try to sell their eggs in American fertility clinics, with these clinics are aware of or sometimes even aided such illicit border crossing. And in Greece, the police identified as many as 75 alleged theft of human eggs taken from the ovaries of IVF patients at a local fertility clinic. And in China, even though we know that the country bans buying the donors' eggs, but we are aware that there's obviously a huge black market where donors would be driving around in a van with darkened windows to an unknown lab outside of the city where it looked like just a residence from the outside, but inside there is equipment, well-trained doctors to help the donors to retrieve their eggs and complete the surgeries. So this is a very informative investigative piece, and I highly recommend everybody to give it a read. So the story basically shows that the global egg trade is thriving in open markets, gray markets, and black markets around the world.
And there may be markets that are surprising, right? Because I know here in Australia, and I would think, most Western jurisdictions, there's the assumption that IVF, for example, fertility treatments, is thoroughly regulated. But you were saying out of the 130 or so countries that offer assisted reproduction, most actually lack that transparency and the national registries to be able to track this?
Yes, there are several takeaways from the story. So for one, it shows that even though in the fertility industries, people refer to egg extraction as donation, but in reality, many women are really selling their eggs for money. And so the human egg trade is really a marketplace. And some people can sell their eggs for very little pay. For example, the egg donors in India that we talked to, she was lured into selling her eggs for under $200 US. All she wanted to buy is just a cell phone. So she got very little pay by selling her eggs. But the model that we talked to in Argentina, she can get as much as $35,000 US for one retrieval because she is tall, she's beautiful, she is, a model. She is also a super producer of eggs. That means she can produce a lot of eggs at one retrieval. So that makes her very popular among the parents. So she can get really high pay. So it's really a marketplace for the human egg trade. But another takeaway is that we found that according to our reporting and the research, it's really impossible to trace the global flow of human eggs. Because thanks to the development of fertility technology now, the human eggs can be frozen on one continent while fertilized and implanted on another continent. So it's very normal, and so it's not rare to see that the eggs are frozen on one continent and implanted on another. So one of our reporters actually followed the eggs flying from one continent to another, and we realized that in much of the world now, this cross-border egg flows operate with minimum government oversight. And also in the U.S., even though there is an industry guideline that would urge donors do not donate over 6 times, that basically to reduce the risk of health risks of those hormonal injections. But we found that it's very hard to enforce such guidelines. Basically, no one is really watching. Because one Taiwanese donor told us that whenever she was asked by the fertility clinic how many times she has donated previously, she always said 4. And there's no way that fertility clinic can double check or trace the donation history of the egg donors. And another takeaway from the story would be that whenever there is a rule change or a situation change in one country, the whole industry will shift to another. For example, in China, we know that the parents, they are allowed to have more than one child, but they are forbidden to buy donor's egg. And the fertility treatments are only available for their married and heterosexual couples. So those who are not married heterosexual couples, but they have such needs, they would seek help elsewhere. For example, they would travel to U.S. to buy donor's eggs and to hide their fertility treatments. So this story really highlights that the whole human egg trade lacks, they can operate with the minimum government oversight.
Cindy, we really appreciate your time. Bloomberg's Cindy Hwang. And the global trade for human eggs is, of course, this extraordinary piece of reporting that our journalists have done for today's Big Take. Subscribers can find that on the terminal. The function is NI Big Take. It's also on Bloomberg.com. Well worth the time to read. More ahead on the Asia trade. This is Bloomberg. Take a look at how Aussie assets are faring this Friday session. It is a down day. Some of that sort of uncertainty over the US data overnight and taking that weak lead from Wall Street as well at play there. We are seeing kind of broad-based losses across the ASX 200 at the moment. The Aussie dollar is more or less unchanged. 63.68 is where we're tracking. So pretty muted day for a debut. But DigiCo Infrastructure REIT is set to begin trading in Sydney today after that $1.3 billion IPO that was Australia's largest offering in over 6 years. Our Asia Equities reporter, Georgina McKay, joins us now for more. So tell us about this company and what we're expecting.
Okay, well, we're expecting, what are we, 8 minutes away from a Friday launch, the biggest IPO.
Friday the 13th.
Friday the 13th,
indeed. Didn't even realise.
The biggest IPO since 2018. So it's 2 billion Aussie, the IPO, and shares are on offer at $5 a piece. So it's a data centre play. It's being launched by alternative asset manager HMC Capital, led by David DePilla. It's coming hot on the heels of global transactions happening in the data centre space. And then in Asia, we had the huge 24 billion Aussie dollar air trunk sale to Blackstone just a few months ago. So everyone's quite excited by this space. There is a lot of buzz. The IPO, there's a bit of market chatter. It's oversubscribed. It's been in high demand. I've been eyeing the pre-market pricing and talking to some analysts. It's a bit of a coin toss which way it's going to go. But yeah, so 7 minutes away. Let's see what happens.
Yeah, as you say, there's momentum sort of thematically, right, and the buzz. Analysts excited?
So analysts are excited, investors are excited, but analysts are also quite sceptical on the valuation. Bloomberg Intelligence have said that, you know, it's blowing valuations of AirTrunk and NextDC out of the water. It is looking quite pricey. Morningstar were pricing it at $3.40, which is about 32% discount to the offer price. So there's buzz. Analysts have acknowledged the fact that there is a lot of interest and this is a very hot space, but it'll be very interesting to see what happens. And, you know, on the back of what the last huge buzzy IPO was the Guzman and Gomez massive debut, best one in a few years. So let's see.
Yeah, all of that. Any implications for the broader IPO market?
Well, analysts are also hoping that this might be finally the thing that we see breathe some life into the all but dormant market here. Over the past year, every time there's been an IPO, so Guzman, and then there was Kuzkul, and then this one's like, we're going to see it come back, but with inflation has still been sticky, interest rates are still high, and then commodity prices, which are often result in a lot of the IPOs on the Australian exchange. Commodity prices have been trending down, a bit volatile, so we'll see. If it's a good launch, it might give other companies a bit of confidence, but there are many other macro factors at play.
Our Asia Equities reporter Georgina McKay, just a few minutes out from the start of trading there. But one of the other assets that we're watching, of course, in China when it comes to that 10-year yield, seeing a bit of a move, perhaps on these expectations that we're going to see broader easing measures from policymakers there. That 10-year yield had fallen about 4 basis points to 1.77 as the not terribly specific lines from the China Economic Work Conference that we had after it wrapped up on Thursday, really, again, just reiterating that focus on demand domestic demand, the sort of vigorous domestic consumption picture is really the key economic priority. We didn't get that GDP target for 2025. Some of the details, I suspect, will have to wait until March next year. This is a picture as we head into the start of trading across Greater China in the next hour or so. Pretty muted there. S&P futures looking like we could see a decent session from the US after declines overnight. This is Bloomberg.